Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top three market points of the week. Now, we have had a lot of news swirling around the markets this past week, but like we mentioned on last week's video, we're going to be focusing on earnings, but we will sprinkle in some additional info there at the end. So, without further ado, let's dive right into your top 3 points. And kicking us off at number 3 is usually a name that makes it to the top of our list, but not this week. So, at number 3, it is Microsoft, falling after releasing their quarterly earnings report. Now, Microsoft did beat on earnings per share and only missed slightly on revenue. So the real thing that is dragging the stock at this moment is the fact that they forecasted slower growth for their cloud computing segment, Azure, to be more in line with previous quarters. Now, the reason for this slowing growth is because that right now they are capacity constrained to meet the AI demand that they are getting as they continue to build out their data centers. So once their data centers can be built out to meet this ongoing demand, growth should reaccelerate in that segment. At number 2, it is Apple, having a strong past quarter, reaching record revenue growth across the company. However, they did see declining sales in China, their second largest market, down 11% year over year. But their revenue was heavily supported by strong growth in their services segment, Mac sales, and iPads. In addition to that, the company did come out and issue forward-looking guidance that they are going to have a very strong forward-projecting revenue growth, largely because of their new ongoing iPhone cycle. And the hope for a lot of investors and a lot of customers is that they're going to be able to do a better job in this new upgrade cycle of factoring in AI technology into their iPhones to better meet these other hyperscalers that are frankly ahead of them in this entire race, the ones like Amazon, Meta, Google. So time will tell on the iPhone front. Frankly, I use an Android, so can't give much of a commentary on that. And then finally, number 1, some of you probably saw this or saw some of our talking points that we sent out, but it was the release of DeepSeek's new chatbot AI model, R1. So for those of you that don't know, DeepSeek is a Chinese AI startup that released frankly, a competitor to OpenAI's ChatGPT over this past week. Now, what's key about this is that they essentially came out and said that they were able to build a comparable product to ChatGPT for cheaper and with more outdated technology than ChatGPT uses. So they claim to have only been able to build this for $6 million, or at least train the final model, while also using 2-year-old computer chips from NVIDIA rather than their leading edge, top of the line Blackwell chips. Now, as you can imagine, this hit NVIDIA very, very hard. NVIDIA fell roughly 20% on Monday as a result of this news that came out. Now, once again, you're probably like, why did NVIDIA fall 20%? That's not their model. They're not OpenAI. Well, it's because of the fact that they essentially illustrated that, like, hey, you don't need the most recent computer chips or top-of-the-line AI chips from NVIDIA to build a comparable AI model. You can use prior dated things for a cheaper price. So what that essentially did was threaten NVIDIA's competitive position, their moat, and their sky-high margins that they're now leading the industry with. Now, there have been ongoing developments news-wise as to whether or not DeepSeek stole OpenAI's data that they were using to train their models on. So, and what is the actual cost that it costs to train the model? Is it really $6 million? Was the model subsidized by the Chinese government? More and more news is coming out. So as we get further developments, if we view them to be pertinent, we'll make sure to update you here on the weekly video. Now, those are your top 3 main points this past week. What are we looking to for next week? Well, next week, we're going to have a lot of labor market data. We're going to have the non-farm payrolls coming out, but we're also going to have ongoing earnings. It's just that time of year, but we're going to have more big names next week. Names like Amazon and Google are going to come out, so we'll make sure to update you here as well. Now, as always, that does it for this week's video. And if you have additional questions, please reach out to your financial advisor or dig into the written week in review. Or if you know somebody that's looking for a financial advisor that would like to answer some of these questions as well, please go to Prime Capital Financial's website, in addition to that, to reach out to connect you with a financial advisor. But as always, hopefully these points get you prepared for your weekend. You can go relax, and we'll see you the same time next week. Thanks again. Bye.